Could you discuss your strategy to invest in emerging markets?
Sure. Actually, our entire firm's investment policy is really based on the fact that emerging markets are growing at 6, 7, 8, maybe 9% a year in a good year. So that's where the growth is. So how do you invest in where the growth is? The way you invest in where the growth is there's a number of ways. One, you can invest in American companies that sell goods and services to the emerging markets. There's the Caterpillars, the Cummins engines, McDonald's, even Apple. Then you can go overseas. We have one strategy where it's an Asia only, this one's a mutual fund, and it's got a 3.4% dividend. People never think that emerging market companies can pay dividends. So again, emerging markets more volatile, so you can find stocks or strategies that are less volatile because of the dividend. The third thing that we invest in is we have an ETF, for example. It's called MOO, M-O-O. And what is that? It's all agricultural companies, or companies that are, for the most part, agricultural in nature. 40% of the emerging market economy's discretionary dollar is spent on food.
Now, the MSCI Emerging Market Index is up about 25% since its October low. Is this maybe an inflection point where we should take some profits?
If you look at a chart of the past 12 years, last year the emerging markets were down 18.4%. Okay, so we're all talking about from the lows. If you were in it all of last year, you had the S&P flat and the emerging markets were down 18%. But if you look at the last 12 years, 6 of the last 12 years, the emerging markets were the best performing index on the planet. But if you stick with the areas that are growing at 6 or 7 or 8 or 9% a year, I think over time you're going to do very well.